Hi, welcome to Globefolio. The NSC All Share Index actually closed the month of May by 5.69%. That's interesting. That means the market delivered 5.6% to the upside. Now, what are we expecting in May? What should we be looking at? The month of May is actually a critical one for the market. In short, it's not just the Nigerian market, but the global economy. Why? It is the period where we are actually expecting the US Fed to announce a 50 basis point increase in interest rate, unlike what we actually expected before, which was 25. Now the Fed is coming out to say we will increase interest rate by 50 basis points. So what's going to be the effect of this in the market? So I'm going to share my analysis from both ends, whether the market goes up, what you should be doing, and when the market comes down, what you should also be doing. Now, if you are yet to subscribe to this channel, kindly hit the subscription button and make sure you turn on notification bell, because when I release an update, it wouldn't make sense for you to start watching a video after maybe like 2 or 3 weeks after I have posted them. So an update will help you to take timely decision on whether you should be buying or you should be selling or probably go cash. And also sometimes the best sector to actually invest in. So in this market analysis and update, I'm going to be looking at sectorial analysis. So we're not just limited to the NSC or share index, but we're going to be looking at individual sectors, how they have performed, and some of the surprises that I'm going to be sharing. Right now, the NSC is at all-time high, approaching 50,000 basis points. You can see the market closed at 49,638 basis points, up by 5.6%. In March, the market dipped by 0.91. In February, the market closed higher by 1.65. And then in January, the market delivered 9%. What is actually driving this market right now? If you are a student of economics, you understand the power of inflation. Now, in the stock market, inflation and NSC market, inflation and global stock market, they have this direct relationship. Except the Fed steps in to say, no, we can't allow inflation to go out of control. That's where the NSC would what? Go the opposite direction, or probably the stock market. So one of the reasons the Nigerian stock market had been trending higher in the last, you can see right from June up to this point, is because of inflation. And we have not seen any news from CBN that they are going to be increasing interest rates anytime soon. So that is why the market had been blasting higher. In short, stocks are actually up. Almost all the sectors have delivered impressive performance, from the banking sector to the insurance sector to the consumer goods sector, industrial sector, and also the oil and gas sector. Each of these sectors have delivered exceptionally well. They have done exceptionally well and have delivered impressive performance. Now we are already in May. What should we be looking at? The US Fed has talked about increasing interest rates. Now look at this headline. 20 hours ago, fears of a Fed mistakes grows as this week's anticipated interest rate hike looms. Market expects 50 basis point Fed rate hike in May. Fed to tackle US inflation with fastest rate hike in decades. So this is not going to be good for the US stock market. But I tell people again that the US stock market right now is actually providing black market for everybody, Black Friday shopping for everybody. So if you have a foresight, if you see the value in the market, you should be mopping up fundamentally sound stock, especially dividend stocks that are actually offering attractive yield. I've shared two dividend stocks with my community, and I've also discussed the fundamentals behind them. Imagine picking up a dividend stock of around 12% in the US market. Imagine picking dividend stock that is of almost above 15% in the US market right now. These are fundamentally sound stock with good revenue, good profits, low debt, and impressive cash flow. So that's enough. So even if you don't have any reason to buy stock right now, for the fact that you're mopping up stocks that's going to be providing constant cash flow year on year, that's enough for you to mop up good and fundamentally sound stock in the US market. So this video is not all about US market, it's about Nigerian market. So right now, the question is, when is the market going to crash? That's a question because a lot of us are actually surprised that NSE is delivering huge numbers. NSE is going up. Now, one thing is certain: when inflation surges higher, when inflation is at all-time high, as long as the CBN is not looking at increasing interest rates, most companies are bound to report profit. How? Because right now everybody is used to the fact that things are expensive. So it opens the door for companies to increase price. You can walk into any store, walk into the market, you see how prices have been reviewed upward. It's amazing how so and most of these managers, when they review price, they are not only going to factor in the additional cost of input or cost of production or cost of sale, they are also going to factor in additional profit. So that's why higher inflation most likely makes company to increase the prices of their products and also make more money. So which means during inflation, operating margin tends to be higher. Check the Q1 result of most companies that are coming out right now. It's quite impressive, especially those ones that have the power, that have pricing power. So most companies that have pricing power, this is the best time to buy into them. This is when they're actually reporting higher profits. So at the end of this video, I'm going to drop my two favorite sectors. So if you watch this video to the end, I'm going to drop my two favorite sectors to still buy more stocks in. And then in my community, I'm going to be specific on the kind of stocks you should be buying in those sectors. So if you're here to join my private community, kindly drop a link or you can drop a comment below or look at the email in the description below and make sure you send a mail to me on how to join my community. Now, this is the NSC All Share Index. Look at how the market had rallied. The last time I reviewed this market, I keep looking at how the market was about, how did the market how the market broke this important key level. Right now the market is still in a very strong bullish run. I've not seen any sign of pullback and I'm still watching. So whatever happens in May will likely determine what will happen for the rest of the year. So but I think that the US Fed, looking at US Fed rate increase, may not likely be favorable for the global stock market. But for Nigerian market specifically, for the fact that the CBN is yet to announce rate hike, and how that the IMF just predicted that Nigeria's inflation may worsen to 16.1% in 2022, which also gives ample room for companies to increase prices, for companies to actually find a way to tame the increasing cost pressure on their operation. So I think that's also going to make the NSE rally higher in months to come. But it doesn't mean that pullback is not imminent. But at this stage, you need to be extremely careful because even me from here, I'm trying to be very careful because if market sell-off comes in today, it's going to be massive. Market sell-off is going to be devastating because it's like the market is actually overbought at this stage. If you look at the RSI is sitting at overbought region. But note, market can be overbought for a long time. So the market is overbought, but it can stay there for a long time as long as inflation figure keeps rallying higher. But you need to be cautious. So my best advice is make sure you only buy fundamentally sound stock. One, number two, and make sure these stocks actually have low downside risk and huge upside potential, meaning that they are yet to pick up, not stocks that have picked up already and already at the top. So make sure you buy stocks that are just picking from the bottom gradually so that even if it dips, you know that the downside risk is very limited. You need to be a proper or a very effective risk manager in the market, or else you might jump into every stock thinking that prices are going up and eventually the market collapse. What happened? You get stuck. So you need to be very careful in this month of May. Another important thing is that May have not been a favorable month in stock markets. If you can check histories of Nigerian stock market, May have not actually been the month of May isn't really a favorable one in the market. The market actually experienced dips, pullback, but it doesn't mean the same thing will happen. But you need to be extremely careful at this stage, not when the market is going to react to the rate hike. And what happens to rate hike? If you're a carry trader, in the forex market. You understand what rate hike means. When the Fed increases interest rates, investors are likely going to pull funds away from emerging markets. Now, why is Nigeria shielded from this carry trade? Is because the market is largely dominated by local or domestic investors and not foreign investors. So the absence of foreign investors in Nigerian market makes carry trade a lot less effective, and then even if the Fed increases interest rates, that might also not be a major factor to drive the market, because if the market was driven by foreign investors, people are actually going to sell off their equities and move into US market because rates is now higher, which makes their fixed income market attractive. So those are things you need to note right now, which means the market may likely rally higher, but the chance is 50-50. I'm not giving you full assurance that the market will keep going up, but for the fact that the NSE market seems to be a little bit disconnected from the rate hike, except there are investors in Nigeria or finance houses in Nigeria that also have exposures in the US market, and these guys might want to move funds into the fixed income market. So let's look at the sectors, individual sectors in this market, and how these sectors are fed and what's my forecast for this sector. So the essence of this video is to look at individual sectors in the NSE and not the overall market. So the first sector I would be looking at right now is the banking sector. Banking sector. Now look at the banking sector right now. Now we call it the NGS banking index. What's the NGS banking index? It's the collection, it's an index that measures all the banks in Nigerian stock market. So look at the banking sector at this point. You notice how the banking sector, all these analysis are going to be technical. So that's pure technical analysis. Now, the banking sector closed the month of April by 6.24%. In March, it went down by 9%. Now, the all-time high of the banking sector is still around 600. So, which means despite the fact that the NSE All Share Index is at all-time high, banking stocks are still cheap compared to their previous high. So you can see the period the banking sector attained all-time high. That was in 2018. How that the index touched a high of 620, between 620 basis points. So you can see that the banking sector is not even close to its high. So what that tells you, it means that there are some banking stocks that are still cheap. So it means that in the banking sector, we still have some cheap stocks to watch out for. So even though the banking index has rallied higher, so you might need to watch out for some banking stocks, because the index itself is not even close to its previous high before the massive dip. So if the banking sector is able to clear this region, now let's look at this important key level that the banking sector is sitting at right now. Now in 2013, notice how it bounced off the 433 level. Remember, my key levels are not exact prices, they are region. So how it bounced off that level, pull back again, look at it again, the same region, pull back and then went back. So this has been a major resistance before the market went down to this point. And then you can see the market rallied higher again, back to this region, pull back a little bit, then it rallied to all-time high. That was in January 2018. Banking sector index went up by 23% before the massive sell-off in 2018 down to 2020. You can see during the COVID era in 2020, the banking sector index dipped to 237. And from then, you can see the gradual rally in banking sector index. Now, how do you check for market trend? I watch out for higher high, higher low formation. You can see this was the previous low, the next low which was higher than this, then we had another low which was higher than this, and then as the market rallies close to this important region, is forming higher low gradually. So if the banking index successively breaks out from 452, we are going to see a higher rally or a bigger rally to 600. So which means in the same banking sector, there are stocks that are cheap in that sector. That's what this means. So in the banking sector, we still have cheap stocks that will likely drive the index to the upside. So I'm going to do my further check to look at stocks in the banking sector that are extremely cheap to still buy, knowing fully well that they have a higher chance of rallying to the upside. These are the details I'll be dropping in my community. So that's NSE Banking Index. So the NSE Banking Index, despite the fact that the market had been rallying higher, is not overbought at this point. Sorry, it's not close to all-time high. Now, even if you look at the RSI on the NSE Banking Index is still sitting at 58. 58. Look at the last rally that we had. The NSE, the RSI went as high as 81 before it pulls back. So with the latest trend index still around 58, 55, 58, it means that there is still upside potential in the banking sector. So we still have upside potential in banking sector. There are stocks you should be looking at in the banking sector. If you're able to put on your eagle eye to look for undervalued stocks, I'm sure you should be able to find these stocks in the banking sector. So from this analysis, the banking sector is one sector to watch out for because it's still not overbought going by the relative strength index. You can see despite the huge rally from 2020, you can see how the RSI had risen gradually. Right now is sitting around 55, 58, not overbought yet. So note that. If you compare that to the NSE All Share Index itself, now you can see if you compare that with the NSE All Share Index, you will see how the RSI is sitting at overbought region. You can see here. So it means that in the banking sector, there are still stocks that are undervalued. There are still stocks that still has huge up or that still have huge upside potential if you're able to spot this kind of stocks in the banking sector. So let's look at another sector entirely, which is the NGX consumer goods sector. This is one sector that is benefiting immensely, from the inflation trend. This is one sector that has been outperforming very well. Now, you can see last month, this sector delivered 70%. You can see here in the month of um, April, consumer goods sector went as high as 70%. You can see right here. So in March, it went down by 4.5. Then it went, is it 70 or 7.65%? Okay, sorry, 7%, not 70%, please. So it went as high as 7%. And now, what's the RSI saying? The RSI is telling us which is sitting around 60. So it's still not overbought yet. There is room for for further rally. Now look at the last in 2018, the high of NSE consumer goods, which was 1,711 basis points. So you can see the market is not even anywhere close to that region. Right now, it's like the market, the index just broke a key level. You can see this important key level, which was tested here before pullback. And right now, you see testing that same region, brief pullback, and then the market gradually broke out from that key level. So it means another sector you should be watching out for is the consumer goods sector. Another sector you should be watching out for is consumer goods sector. So from all this indication, it means that there is room. The market might likely rally higher, but you must be careful. You must apply caution because if the market was sorry, it means there are some stocks in the market that could rally higher despite the fact that the market is expected to pull back. So we are looking at certain companies in this market at this point. What are the companies? Which companies are we looking at in the banking sector? Which company are we looking at in the consumer goods sector that still have upside potential despite the fact that the market has risen higher? These are the specific information that I'll be dropping in my community. So right now, look at the consumer goods sector up by 7% in May, and right now it's breaking out from key important regions. So despite the fact that the NSE All Share Index has broken to new high, most sector stocks, most sector index looks like they are far from their all-time high. Like you can see here, I've demonstrated that in the banking sector, and right now I've also demonstrated that in the consumer goods sector. Consumer goods sector is one sector that is benefiting more from inflation. I've discussed it and I've talked about this several times, even in the last 1 year, last 2 years with my community. The best sector to watch out for right now is the consumer goods sector because this is a sector that will most likely benefit from inflation, especially when you buy into companies with great or strong pricing power, meaning that they are able to increase price without consumers leaving, without consumers having no choice but to continue to buy into what they sell. So that means their products are inelastic. So if you can spot inelastic products in the market, look for companies that sell this inelastic product and are listed on stock exchange. I bet you have found a good man to take advantage of in the market. So consumer goods sectors, same. Then if we go to the next one, which is the industrial goods sector, the industrial goods sector. Let me quickly get that out. Okay, so industrial index. Now you see industrial index right now. Now the industrial index right now is made up of companies like the Dangote Cement, the Lafarge, the BUA. These are heavy equipment companies. So you see the industrial sectors too. So for me, industrial sectors looks like it's overbought. You can see how it's you can see here overbought. And looking at the MACD right now, the MACD is actually telling me that very soon we might see a cross to the downside. So it shows how the market has weakened. You can see here. So this is like a sign that the market seems to have weakened out. So I'm not going to be buying into industrial goods sector at this point because the MACD at this point is telling me that we might see a pullback. Besides, this might even be the first sector to pull back before other sector. So right now, this sector is looking overbought at this stage, and then with the MACD showing me that very soon there might be a bearish cross to the downside, I may not buy into this sector. So that's why stocks in this sector, you have to be very careful. But at the same time, there is a stock in this sector that has the potential to rally higher, and that's WAPCO. I've discussed WAPCO in my previous video. If you've missed that video, kindly go watch that video. So if this sector is to rally higher, I think it will most likely be driven by WAPCO, Lafarge WAPCO, because Lafarge WAPCO has huge upside potential from the recent financials that it has posted, going by the how the company has consistently reduced its debt to a low level of to where it is right now. So if this sector is to rally, Lafarge WAPCO might be a major driver in industrial goods sector. So look at how this sector, you can see the previous all-time high we had in 2018 was 2,400, and how the market is actually approaching that level from this point. Now, all these analysis are based on my own check. You need to do your further analysis, make sure you do your due diligence before you eventually take a buy or sell decision. So industrial index seems to be getting close to its previous high, and that might call for concern for me, meaning that I would likely not be too exposed to that sector. Now, another sector that has also performed well is the oil and gas sector. Oil and gas sector. In short, oil and gas sector looks like it's not even ending anytime soon. You can see here going by the massive rally from a low of 172. Look at how this sector has rallied successively. Last month it was up by 19%, driven by most oil stocks. And this is where you find companies like Oando. I've discussed what reasons Oando should be on your watch list, and you can see how that Oando is part of the company that is driving this sector. We have bigger oil companies like Total, we have Seplat, we have Eternal Oil, we have a lot of them. So you can see from these demonstrations that one of the best performing sectors so far last month is oil and gas, which is up by 19%. And then you can see how the RSI looks overbought at this stage. So, but I'm holding on strongly. So even if we see pullback in this sector, I'm not going to sell my oil stocks. The major oil stocks that I have in this sector I've shared with my members of my community. One of them is Oando, and I've discussed how Oando why you should buy Oando in January, and I also did a repeat of that video as a continuation to that analysis. And Oando since then has rallied from 5.3, right now is sitting on 6 naira. So oil and gas sector is one of the best performing sector right now. So I have few stocks in this sector that I've positioned myself in. Now the final one to watch out for is the NGS insurance sector. The NGS insurance sector. Look at the NGS insurance sector. Now, there's one amazing thing about this insurance sector. If you look at it, why other sectors have rallied higher, and even though they still have more room to go up. Now, insurance sector is showing one interesting setup that I like so much. And what is that setup? Let's start from this point. In 2013, notice how the sector found resistance at 164. It pulled back. Market rallied back to the same region in 2018, which was how they followed by the huge crash. And then you can see pullback. And then you can see how the market successfully break that 164 region by 19.97 in December 2020. The market rallied high to a new all-time high of 283. Now you can see how the market pulled back to this same important region, which means this was previous resistance now turned support level. And then you can see the gradual uptrend in this market. Now, why my MACD is still telling me that the market has not fully turned bullish. One sector you should watch out for right now, which is my number one sector to actually buy your stock, is the insurance sector. From this analysis, it means that the insurance sector has just pulled back from a major resistance turn support. Now, I'm waiting for the sector to eventually find a balance. What do I mean by balance? By the time the MACD eventually crosses to the upside, we might see a huge run up. So with the MACD right now still below, and then looking at some other index pointing to the fact that the market could be headed to the upside, I am looking at picking one stock in this insurance sector. So watch out for insurance sector as a place to buy your top performing stocks in the next 3 to 4 months. So watch out for this besides for the rest of the year, because the best performing stocks might come from the insurance sector. I mean, between May, that is this month, to December, going by this analysis that I just shared right here. So if the MACD eventually crosses to the upside, we might see the insurance sector beat the previous all-time high of 283 basis points. So watch out for this particular one. I'm going to be dropping some insurance stocks to buy. If you have followed my video on how to analyze insurance stocks, you should also know how to spot the best stocks in insurance sector. I have a video on how to analyze insurance stocks. Go to Globfolio, and I'm also going to drop a link to watch that video. If you're able to watch that video, I'm sure you should find the best insurance stocks to buy as the market recovers from this important support level. So this is my analysis of each of the sector, and some of the best two sectors that I will likely be putting on I would likely be doing my analysis, or probably trying to where I would likely be getting most of my best buys are the insurance sector, the consumer goods sector. Now, it doesn't mean that other sectors will not produce good stocks, but I'm looking at stocks that are still good. So if I'm to buy into any company stock right now, I will most likely be looking at the insurance sector and the consumer goods sector. Now, in the insurance sector, I will be looking at profitable insurance companies that are delivering good numbers. Despite the increasing price, they are also able to increase premium to cover up for the increasing price. So any insurance company that can increase premium to make more money in order to cover increasing cost, those are the kind of insurance company you should be buying. And it must be profitable both at the bottom level and also at the operating level. So we're looking at insurance company that has good profit in its operation, generating good profit in operation, and also have a good profit after tax. So these are the sectors that I would likely be looking for the best stocks to buy. And then once I find these stocks, and then although I have some of them, I'm still doing my further analysis. Once I'm through with them, I'm going to drop it with members of my community so they can quickly take advantage of this sector. This is the best time to do your sector rotation. This is the best time to be able to cash out from the few stocks that have rallied higher, because I see the market going up a little bit, but you need to be cautious at this point because the market might pull back at any moment from now. NSE All Share Index looks extremely overbought, but some sectors are yet to become overbought, meaning that they might try to catch up with their previous all-time high. So this is my feedback on the NSE in the month of May, and then what you should be expecting in the market. Kindly hit subscription button if this is the first time you are watching this video, and also turn on the notification bell for more details. If you want to join my community, kindly send an email to me. You can find my email in the description below. Please do not send any email to anyone. My email is in the description. Anybody that drops their email in the comment section is not from me. My email is in the description. And if you send me an email, I'm going to respond to you and share the guide to join my community.